Well, you know the days are numbered on this central banking fractional reserve Ponzi scheme that's been set up and running for the past 100 years, when even mainstream news like MSNBC is reporting on how much of a scam it is. Check this out.
Well, in America today, we are getting closer to fully exposing the greatest con and cover-up in the history of this country. It involves our banks, the Federal Reserve, our Congress, and of course, you and me. First, though, think of the Fed as the godfather in this con.
I'm going to make him an offer he can't refuse. Now, just go outside, enjoy yourself.
The role of the godfather, played by former Fed Chief Alan Greenspan, who appeared before the Financial Crisis Inquiry Commission this morning, denying that he ever knew what he helped perpetrate.
The notion that we in any way favored any of them or basically were influenced with respect to policy by what they said, other than the facts they gave us, which we always evaluated, I saw no evidence of that in my tenure.
And he may not have favored among the banks because Greenspan was working for all of the banks against you. The bankers, of course, the unrepentant con men being supported by the Federal Reserve.
You picked him clean. He never missed it. Remember that sting experience? How good you felt?
So good getting that money for free, getting away with it. Here's how the con went down. The bankers were operating under an implicit guarantee from the godfather, the Federal Reserve, in the form of guaranteed low interest rates, guaranteed cheap money exclusively for the con men. Then, Chairman Greenspan, the godfather, would agree to hold those rates, let's say 2% for as far as the eye could see. The banks, or bankers, the con men, would borrow that money from the Federal Reserve, let's say 2%, and then turn around and lend it back to you at, let's say, 6%. That encouraged the patsies, you and me, to be drawn into the con because 6% looks like a pretty low rate. Low rates for houses, low rates for cars. Heck, you can join a health club, make that on payments, they'll turn that into bonds, and of course, promises of a higher than average return for those managing teachers and policemen's and judges' pension funds that are buying into the con as well. And here exactly is where the con comes in. As you and I both know, the banks had no money. They were getting it from the Federal Reserve, which is us. It's funny money. They had no capital to back up their lending. But that did not matter because they also had no risk in the lending. If the lending paid off, they win. And they won big when they did that because they did it with...
I just don't understand why he keeps on talking in the past tense like this is something that happened. You know, it's still going on every single day. It's even worse. They don't have 2%, rates to the Fed anymore. The lenders have 1% now, and it's locked in, never going different. So, I mean, it's just ridiculous. He just keeps talking in the past tense, but it's good he's exposing them for what they really are.
With leverage. Top Manhattan executives alone paid themselves $121 billion in bonuses over the first part of the decade. Now, mind you, when the bank loans failed, they knew they were too big to fail. So the rest of us, you and me, would have to bail them out. The ignorant electorate, if you will, the patsies, who had no idea, and really still don't, understand how badly they are being conned by our government and our banks. Once the banks, however, realized there was no losing, the question was, how do we make the con bigger? How do we get more money through this crazy machine so we can get richer? The question, or the answer, I should say, is simple. Make more loans, more credit card loans. Think of all the credit card applications that were sent to you over the past 10 years. More car loans. It's the reason General Motors went upside down. It wasn't the cars. It was because they were running a financing scheme. Home loans, you know the narrative. So the people most hurt by this con, the home buyers, the cops, the teachers, pensioners who were suckered in by the bait of low credit and high returns in exchange for buying worthless toxic assets manufactured by the bankers. That's why your pension fund was wiped out. That's why the interest rate on your savings to this day remains around zero. If you're a retiree, you know what I'm talking about. It's also why you're now drowning in a mortgage on a house that's worth far less than you owe, because the bankers were happy to lend you money they did not have to drive up the price of that house, because they knew the more loans the better, but no downside for them. So what's next? Higher taxes for us, higher interest rates for us, to pay for the bailouts, while our government that was theoretically elected by us refuses to recover the stolen money by the con men or fix the system that allows them to continue to perpetrate the con.
You know, like the whole house market thing is a complete scam. It's win-win situation for them, because when they give out lower interest rates, it makes it so more people could qualify to buy the houses, which increases the cost of the house, which gives them more debt in the long run because the price of the house is so much more. So they win on both accounts. They get more people able to buy them, plus it increases the price of each one, so they get more money out of it.
Against you and me. The current financial reform legislation proposed by our government would give the Godfather, the Federal Reserve in this case, even more power to regulate the game. The con men, represented by the Wall Street bankers, of course, giving our Congress a cut of the action, $344 million so far lobbying against the bill, second only to health care. We saw how well it worked out for special interest on health care. Home run. They got a guaranteed customer base with no reform. I'm sure the bankers will do pretty well as well. All this, of course, while assuring our lawmakers, many of whom do not even understand how the con works in the first place, that the financial crisis has been fixed, of course, with an infinite supply of your money. After all, just check out stocks over the past year. We are back over 10,000 on the Dow, thanks to that blank check from the Federal Reserve. So now, as we finally head towards Congress debating financial reform in our country, the question must be asked: does it make sense for our government to give more power to a Federal Reserve and banker con men who unrepentantly caused this crisis and make money at your expense on the pension side and on the credit side? That's the current plan. Give them more power. Joining us now, Congressman Alan Grayson, Democrat from Florida, who sponsored the audit the Fed bill with Ron Paul. Congressman, pleasure to see you again. And on the phone, Bill Fleckenstein, president of Fleckenstein Capital, and more importantly, author of Irrational Exuberance, The Greenspan Bubble. Bill does an exceptional job of explaining exactly how the Godfather, Alan Greenspan, allowed the banks to perpetrate this con. In fact, Bill profited rather handsomely betting against the con, knowing that it was a bubble. I know, Congressman Grayson, that you understand more or less everything that I just said and then some. And are likely more frustrated than I am at our Congress's unwillingness to actually acknowledge or understand the con or address it. Why do you think it has been so difficult and continues to be difficult for anybody in our Congress to really deal with this?
Well, I have the benefit of having worked as an economist for 4 years before I was elected to Congress, and that does give me some insight into how all this works. I think a lot of people on Capitol Hill simply don't understand how this works the way you just described it. Clearly, they should be listening to your show.
If you don't understand that the bank's incentive is to lend as much money as possible without any repercussions, because the only way they make money is with lots of lending or gambling, effectively, and
it's not even a gamble, because if they lose, it gets paid off through bailouts. If they win, they get to keep the profit. That's not gambling. That's just robbery.
Everybody else's incentive is to try not to get screwed. And yet the Congress is feeding the money to those who have a directly adverse incentive. They make money by screwing over pensioners and borrowers, and
now they're saying that they want to take everybody's pension and give it to the failed banks to prop them up. It's just robbery. They act like it's an entitlement program that after you paid into it all these years.
Congress is making that more possible, not less possible. How did we find ourselves in this situation?
Well, I think the fundamental problem is campaign finance reform. I'm not trying to change the subject here, but I do want to point out that we wouldn't have this problem except for the fact that lobbyists hand out $5,000 checks.
Bribery.
Bill, explain in the simplest sense why it is Alan Greenspan is so directly responsible for creating this con.
Well, first of all, let me say, Dylan, yours was one of the most succinct explanations of the problem that I've heard, so that was quite a good send-up that you did. Because Greenspan is ultimately responsible because, A, he was the one who put rates at a level that was too low and then refused in the face of all evidence to do anything to...
Hey, don't blame Greenspan here. Yeah, he put him at 2%, but Bernanke put him at 1%. They act like he's not doing anything wrong. And he's man of the year, Time Magazine.
Tried to retard the potential for an asset bubble. He was in denial about the equity bubble, and then turned around and created the credit/housing bubble, and to this day refuses to accept any responsibility for it.
Well, of course he won't accept responsibility, but that's how they make money. They can't make money without new bubbles. That's why they're trying to start a new bubble. They're trying to start to have futures trading on box office movies. So they want derivatives trading off of Hollywood, which is completely ridiculous because it's so open to insider trading. It's like ridiculous. Ugh.
When prices are held at an artificially too low of level by putting too much money in the system, that money seeks its way out into other places, and and it will end up creating a bubble. And the more leverage used in the bubble, the more dangerous it becomes. Greenspan not only made the interest